Well, the international specialist staffing group Empresaria has just released its full year figures. And it's an interesting set of figures. The headlines of revenue was down by a modest 3% to £187.9 million, but the net fee income, that was 5% higher at 44.6 million. So it's been, I think, for most people concerned, a challenging year, but they seem to be coping rather well. Let's find out how. We're going to talk now to the CEO, Jost Krullen, and the financial director, Spencer Reeford. Looking at these figures, Spencer, why was there this fall in revenue, and how did you manage to actually get it back to get a very positive net fee income?
That's right, the overall revenue fell by 3%, but a lot of that was down to the currency movements. So obviously we've seen large impacts, especially in the Asia region. So on a constant currency basis, revenue was actually up 2. And then within that, our permanent revenue was up by 7. And within temporary revenue, that declined, but we had much stronger margins coming through. So actually at the gross profit level, which is our net fee income, we actually saw a positive contribution. And that helped the net fee income grow by 5. And in constant currency terms by 11%. Also, we had good cost control through the year. We've been doing some restructuring in 2012 and 2013, which has flowed through to have much better cost base, and that means our profit before tax actually grew at a stronger rate as that flowed through into much better earnings per share.
Yeah, so EPS is up as well, and the debt is down, so that's a pretty positive.
That's right, the debt reduced by over a third, down to 9.8 million. That's a key thing for us. We have a metric that we try to follow, which is to get our debt to debtors ratio down to 25%, and we're now down to 32%, and that's a big drop from previous year, so we're pleased with that.
Right, so what's been the strategic thinking behind that performance? Because you've been restructuring, you're the guy captaining the ship, he's just doing the numbers. What was your strategy, and how successful has it been?
Well, 3 years ago, when I kind of took over the helm from the former chief executive, we started to review the strategy of the group. As we are an international staffing company, we're focused on specialist and professional staffing sector. We follow a multi-branded strategy. That means that our brands are tailored and customized to the needs of our clients and candidates. These brands are basically present in 18 different countries in over 6 different sectors. So we're quite balanced and diversified. We take a pride in developing leading brands in the sectors that we operate in and bring them into our international network. The group as such has a history been built up in the UK back as of 1994. And in 2004-2005, we kind of took the decision to internationalize and grow our business into the predominantly emerging markets. So today, we're present in a number of very high growth markets all across Asia Pacific, Latin America, in continental Europe and Germany, which as such is not an emerging market from an economic perspective, but it most certainly is from a staffing industry perspective. So we're very well positioned over there as well, and of course in our homeland, the UK, where we operate our brands.
So it's a kind of two-pronged strategy in a way. You're looking at new markets, but you're also looking to rationalise and restructure your existing operations as
absolutely, well. Absolutely. I think we put a lot of effort in the past 3 years to restructure our organisations and to bring them in alignment to the 6 sectors that we are operating in, and it's proven to be a strategy which has been delivering to the financial performance goals that we've set over the past years, and we're confident that we have a platform now to further develop and grow. And continue to deliver to the strategy and to the financial KPIs.
Yeah. So in terms of the financial KPIs then, so where is the focus in terms of geography, i.e. which geographies have got the most potential for the future, and also which sectors are looking exciting?
Well, we're focused very much on the 6 sectors that we're currently in, which is technical, industrial, financial, IT, digital, retail, executive search, which covers the kind of Asia and emerging market regions, and healthcare. So those are our kind of key target areas, and that's where we're focusing our attention on. In terms of regions, we've got a pretty even split between the UK, continental Europe, which is pretty much Germany for us, and the rest of the world, which is Asia Pacific and Latin America. So we see some good opportunities within Latin America. There's the next emerging market. Obviously, Asia Pacific is still a region where we expect to see growth, but that's very much more focused on organic growth. And we opened up a number of new offices in 2014 there in Hong Kong, Mexico City, Santiago, and Kuala Lumpur. So we're continuing to invest in the business to look at long-term growth, as well as looking at opportunities to get into other regions. One of the investments that we made in 2014 was in Dubai, getting access to a brand new region, which is quite exciting. There's a lot of growth to come from that market, with a lot of infrastructure spend expected over the next 3 or 4 years.
So that's an interesting strategy, a bit of organic growth, a bit of growth by acquisition as well. So it's a nice balance there, and you're operating in lots of different areas. But I just wonder, to play devil's advocate, what's so special about your group? Because a lot of people do the same thing. They've got the same kind of hybrid growth structure. Why are you different?
I think that the main difference is that we follow this multi-branded strategy. As I said before, it's very important in talent shortage markets to position your brands very much focused on the needs and the requirements of the professional candidates that you're aiming at, as well as the clients that you're providing the services to. It is all about an inch wide and a mile deep. So you need to create in-depth knowledge about the markets that you operate in. Following a mono-brand strategy is, in my opinion, a very strong proposition in a more general market approach. Moving into more specialist and professional markets, the multi-brand strategy is better suited for that. As we are an international player for specialist and professional, for the professional job roles, it's obvious that we've chosen for the multi-brand strategy.
And it's also looking to the future, because I think your industry is very much a barometer of what's
Absolutely.
happening in the general area.
Absolutely.
And I suppose it would be fair to say that you are now suitably equipped to be able to be flexible enough and responsive enough to changes in it, because you've got a certain number of brands, but a lot less than you actually had. Are you agile enough to be able to respond to changes in the employment workplace? And if so, where do you see those changes coming? What's the next big thing? What's it going to look like going forward?
Well, I think in general what we see is that across the board in the countries and the regions that we operate in, GDP projections are all quite strong and positive. One thing which is important to understand is that the staffing industry is very much linked to the GDP developments. So if economies are growing, that immediately has a spin-off in a positive way to the staffing industry, where demand coming from client companies for professional specialist staff is growing and increasing as well. And that as such has an effect on the candidate market. So you quickly move into talent shortage markets. Talent shortage markets predominantly in technical engineering and IT, but also in financial services and other sectors that we operate in. This is exactly why this multi-brand strategy kind of nicely feeds into, because it addresses specific target groups and therefore has an interesting and attractive proposition to both clients and candidates in talent shortage markets.
Right. Okay, gentlemen, thank you very much indeed. That's
Thank you.
Josh Crolin and Spencer Reeford. Thank you very much for joining us.